Hello everyone, my name is David Varsimashvili. Are compliance regulations becoming so complex that they are killing the businesses? This compliance is no longer a side function. It's a core operational requirement. AML assessment is no longer just a regulatory requirement. It's a fundamental necessity to safeguard organizations from financial, legal, and reputational risks. Do sanctions work or not? The answer is both yes and no.
Hello, everyone, and welcome you to the Soltesz Institute webinar. My name is Viktoria Soltesz, and I'm the founder of the Institute, and we are bringing you latest information, innovation, right from the experts. And today, we have a very exciting topic, which is mastering payments, how we can master our payment processes, our overall payment strategy, to make sure that we've got the maximum out of it. And I've got an amazing industry legend with me here today, Justin, who is having a lot of experience when it comes to acquirers, merchants, e-commerce businesses, pricing, acquiring great latest technological innovations. So I'm just super excited for this chat. Thank you very much for joining us today. Can you tell me a bit more about yourself? How did you end up in payment? And obviously, what do you do in this industry?
Sure. Thank you. Firstly, thanks for having me. So my name is Justin Hanna. I work at NoviPay as head of sales for the UK and EU. How did I get into payments? What I can say is I never grew up thinking I wanted to work in the payments world, but I'm here, which is fantastic. I think I fell into payments and I don't think I'd ever leave, which is always really interesting. I don't know many people that have left the payments industry. It's very exciting for me. And why is it exciting? It's consistently inconsistent, and it grows every single day. I think I can openly say I learn something new about payments every single day, which is key. It allows you to get out of bed in the morning and excited for the job that you do. It doesn't mean it's not stress in our jobs, but actually the fact that you are learning with the businesses and the ecosystem around you, I find really, really, really interesting.
That's right. It's like Hotel California. You can check in, but you can never leave. Once you start payments, it just robs your heart. And because there are so much innovation and so many exciting stuff. And I would say, I think I can talk for you too, that 80-90% of our job is problem solved. New problems are always coming up. You have to be creative. You have to be innovative. You need to know a little bit about everything, a little bit of operation, a little bit of data security, a little bit of customer service. So there are so many moving parts, which makes it interesting. So thank you very much for being here with us today and sharing your knowledge. As usual, we collected some questions from the audience to start with, but of course, just elaborate on any of the aspects that you encountered in your day-to-day work. As long as you wish, these questions are just to really give us a bit of a skeleton and a setup for the whole conversation. So let's start maybe with the acceptance rates, because I feel like that this is one of the areas that we don't really talk about. when we have a merchant, an e-commerce business, anyone who is trading online, the first question, how can I get it cheaper? But cheap is not always the best way to go with it, right? Because I can find someone who is doing it cheaper, but what's going to be the quality? What's the risk? What's the technology? Maybe you need to then reconcile everything manually. So what are the key factors that influence acceptance rate? What are these acceptance rates? Why they are important, and how we can make sure that businesses optimize these acceptance rates?
Yeah, and I think for me, to begin with, when it comes to acceptance rates, is actually knowing what an acceptance rate is. An example of this is if you have the same customer that attempts 5 different transactions, and the first 4 transactions are declined and the 5th one is accepted, but you as a business seeing that transactions 100% acceptance, or you see that it's 20% acceptance, because as a business, you've got that buying customer to make a purchase. So I'd always say when you look at acceptance rates, ensuring that you know how you're going to measure that success. A couple of other key factors to think about there is how your customers are paying. So what's your acceptance rate via your desktop transactions versus your Apple Pay transactions versus your maybe in-store transactions? So I think for me, it goes back to comparing apples to apples. And you mentioned there, Viktoria, cheap is not always the best, right? You pay twice is the old saying. And what I find really, really interesting, I've seen some proposals over the years that may give someone a 10 bip reduction in their payment costs, which sounds great, sounds quite appealing. However, their acceptance rate is 75%. You can get that acceptance rate to 76% and you're £100 million a year turnover business. Is that an increase of £1 million on your bottom line revenue that you're missing out on because you're trying to save £50,000 a year in fees? So I think when it comes to the key factors of acceptance rates is really understanding what they are today. And probably even more importantly, what your decline reasons. So why are your transactions being declined? Is it insufficient funds? Is it fraud? Is it the wrong type of transaction being flagged? An example of this could be you've got someone that is buying pair of trainers from a retail shop, but their transaction is financial services. Now, every single time you process a transaction, and as a business, you have the MCC code, the merchant category code assigned to your business. Always ensuring that you have the right code against your business is key to ensuring that when a transaction is processed through the acquirers, the schemes, and the issuers, that they are really understanding the facts about that transaction and ensure that they make the correct decision on accepting or declining that transaction. I think with that as well is I would always ask my payment provider, the MCC that I'm on, my acceptance rate, but also question them on the acceptance rate and benchmarking against the rest of the industry. So if I was a retailer, how am I performing against other retailers that may be my competitors, and how do I benchmark against them? That will then allow me to make informed decisions. And as a payment provider, that should be your job, is to ensure that you're helping your merchants get better acceptance rates. Now, if you were an account manager or you were managing a portfolio of merchants, if you were working through a payments provider, you should be going to your customer and telling them exactly what they're doing and how you as a business is going to improve that current process. That was our job. That is why we're getting paid to do what we do, is to help businesses take payments.
You think the acceptance rate is always the fault, or the decline always need to be found at the merchant side, or it could come basically from the acquirer? Because we have seen it so many times when, of course, you're asking before you integrate a new payment provider, what's the acceptance rate? Of course, everybody's saying we are the best, we have the highest acceptance rate. Of course, the payment provider wants that business. How do we actually know what we are signing up for? How can we even check it or test it? Or is it always the problem from the merchant side of the fraud, of the different settings, or it can come inherently from the payment providers' channels too?
Yeah, it's a really good question. You've seen it before where sometimes merchants are punished because of the acquirer that they're working with. Mm. So an example of that may be you may see a specific issuer in Sweden or Italy that really doesn't like acquiring transactions from one acquirer. So you see that they have a different risk appetite on all transactions that are being processed to that acquirer and that issuer. So you could be a really low risk customer being punished because you're required to be working with lots of high risk businesses. And this is where it makes it really difficult for payment providers, because you're having to manage, on some instances, all these different relationships with different issuing banks in case you have to reach out saying, hi, can you tell us, well, we've got a 95% acceptance rate for this certain BIN number for this issuer. So it's definitely not just on the merchant, because you wouldn't expect the merchant selling trainings online to have a relationship with sometimes a random issuing bank in a country that they're not even on the ground on. That's where they're reliant on a payments provider to really give them what they need.
Is there 100% acceptance rate what everybody's dreaming about, or it's even an impossible? Is there something like it's reasonable to aim for 70% and 80%? And of course, you have to budget it accordingly from the get-go.
Yeah, no, I think it completely depends on the sector that you're in, MCC, the value of your transactions, what it is you're selling, your actual acquirer, the gateway you're processing through. Are you going to use an orchestration platform? Are you comparing acceptance rates on cards to acceptance rates on APMs? We know, for example, open banking, we talk about acceptance rate in open banking is great, but actually what's the process of pre that transaction and post that transaction? So 100% acceptance rate, it's never going to happen. I think if you're working in some sectors where the acceptance rate is high, you think, it's always, again, down to your payment provider to benchmark them against your industry. And actually, a lot of payment providers are doing this now, right? They're going to QBRs and saying, here's your acceptance rates, here's how you benchmark, and here's how we try to improve it. A prime example of this, and we see it all the time, is businesses not having a great acceptance rate because it's failing, it's really secure. That customer does not have Apple Pay. Providing a merchant the ability to integrate Apple Pay into their gateway would have a direct improvement on acceptance rates, because you're not going down 3DS channels. So not only is it giving your customer a better experience, you're also not paying 3DS fees.
Right. There is so much to unfold here, because you mentioned a lot about these fraud prevention methods. And I have seen that oftentimes the payment provider sets these up. These are the ones that you work with. That's it, take it or leave it. I'm not going to change anything for you. Just plug in and take what you're getting. But the other side, there are a lot of opportunities from the merchant side as well, how to set up these fraud prevention measures. So how do these fraud prevention measures impact acceptance rate? How we can obviously optimize, and how companies strike the right balance between obviously the security and the approvals that we don't let the fraudulent transaction through, but obviously it's not blocking our business either.
Yeah, the biggest piece when it comes, I think, to fraud programs is false positives, right? Mm-hmm. How can you say no to all the wrong people and say yes to all the right people? And it's probably that silver bullet we don't really, I say understand, but we know we're never going to get there, because fraudsters are so intelligent and they're working on this 24/7, right? And how can we as an industry try to prevent ourselves from fraudsters without just saying, hey, it's cost of business, right? And if we rewind 10 years ago when people talked about chargebacks, you just take chargebacks as a cost of business. And actually now there's businesses that have been created over the last 10 years that are really allowing merchants and gateways and acquirers to combat fraud, without it's going down the refund issue. But what we're always trying to do is chargebacks is frustrating. What's even worse is getting fines from the schemes for chargebacks, right? Because that ends up costing more. So when we talk about what can we do to help the impact by putting in more fraud prevention for merchants, is speaking to the experts. Now, we have to be absolutely open and honest with ourselves. Sometimes as gateways and acquirers, we are not fraud experts. This is why fraud platforms have been so successful. So making sure that we are embedding these fraud platforms into the products that we're selling and getting a real understanding of how it's helping the merchants, whether it's pre-auth or whether it's post-auth. And I think as a merchant, you should be really understanding where you're selling your products. So if you are selling trainers or t-shirts, where in the world are you wanting to sell them to, and maybe not being desperate to sell to anywhere, because actually what's the cost of that goes wrong. Yes, it is going to be a cost of business, but trying to slim that cost down as much as possible by putting in the right fraud prevention measures is absolutely key.
I agree with you. And there is always a very delicate balance between getting it right and actually all parts are optimized and it's really tailored to your own business, right? So there is no one size fits all. And as you said, so many times we have seen when, there is a new startup company, they are so optimistic about everything, and when you ask them then where do you want to sell to the whole world and what kind of payment methods you want to take, everything, and who's your customer, everyone. So yeah, we need to be a bit more thoughtful about it and set the standards right.
Yeah. And I think it's kind of careful what you wish for kind of thinking, right? As you mentioned there, if you started a business tomorrow, you wanted every single payment method, you can end up overwhelming your customer, right? There's nothing worse. And then as a consumer going onto a payment page and getting offered 45 different payment methods, of which you don't really care about most of them. So as a business, understanding the customers you're trying to sell to and what they're looking for. If I'm in the UK, I don't need to pay by Ideal, right? However, if I'm in the Netherlands, I absolutely need to be offered Ideal as a payment method, because that's where, again, when it comes back to acceptance rates, it's offering the right type of payment to the consumer that you've got on your page to make the payment. Absolutely key. And sometimes people think they're giving their customers what they need, but also feedback. Ask your customers. Ask them how they want to pay. Like I said, you should always be offering Apple Pay and Google Pay. Open banking is now coming into it as well. Should you be offering open banking, and where should you be offering that as a payment method?
That's right. And I'm very glad that you mentioned open banking, because it looks like in the last year, open banking was everywhere. And some of us are questioning that maybe that could be a great competition for Visa and MasterCard. Maybe it's going to be, a standalone product on its own. What are the issues with that? In open banking, for example, you don't have a chargeback. That's it for the merchant, but it can be really crippling for the client if something goes wrong. That could give more opportunities for fraud and obviously scams on the market. But what do you think? How open banking is reshaping this whole industry, and what are those opportunities for the merchants, for the clients as well? What are the benefits? What are the complexities?
Yeah, look, firstly, I'm absolutely pro open banking. I think it's a great initiative in the payment industry to compete with the duopoly of Visa and MasterCard, albeit Visa has now acquired an open banking platform in Tink, which I think was for the right reasons. I think for me, what does open banking do for merchants? Reduces cost, fantastic. Increases speed of settlement, fantastic. Right, two really, really big things there that are painful for every single merchant, that when you open up a store to start trading, you probably don't think about them two things. The cons, in my personal opinion, is yes, you want quicker settlement, but if you're processing 1,000 transactions a day and you're receiving 1,000 different payments every single day, how do you report and reconcile on them payments? So like I mentioned before, it's careful what you wish for, because if I was receiving as a business 1,000 different payments into my account, is there a cost to that from my bank? And how am I knowing what every single transaction relates to? So that would definitely be something just to have a think about if you were accepting open banking transactions. I think for gateways, it's another payment method, which is great. But again, it goes back to who are you competing with when it comes to payment methods today? So are you competing with Blick, for example? Are you competing with other payment methods that may be in that region? We look at Pix in Brazil, that has done it so successfully. If we look at the UK, when it comes to open banking, it's, for me, the blocker is the banks themselves alongside the schemes, because people have invested millions into allowing for open banking APIs to be integrated into infrastructure, but the cost that of in-change fees and scheme fees that these big companies are making is very hard to let go of. So that is why I think it's probably moving a little bit slower than what it could. But also there's a reason why I think this morning a famous food brand went live with open banking. I paid for pizza a few weeks ago via open banking, right? So yes, the opportunity is there. But again, my mother would be so scared of using open banking. Right? She thinks someone's taking money directly from a bank account. So consumer education is absolutely key if we want open banking to be successful. The thing we need to do is probably to stop calling it open banking. Right? But I can't help myself because I'm in it every single day. Pay by bank is probably the best term to use it for open banking. And then there needs to be a lot of consumer adoption and education. An example of this, especially here in the UK, is when we look at contactless on the underground, nobody wanted to put their card against a random gate to take money out of their account. And actually, the underground then quickly allow people to know that it works. It's not fraud. Then all of a sudden you see this huge hockey stick growth in contactless payments. And look what that has done globally now when it comes to payment methods. So I think open banking, for it to be successful, needs a lot of consumer and merchant education. Where there is probably a bit of a struggle as well is we've got open banking platforms that are only open banking platforms. So their arch enemy is the card payment world. I think for an open banking provider to be successful, they need to marry up with card payment providers very quickly and offer it as an alternative solution, not a complete move away from cards.
Right. You see open banking as a payment method, even with the public transport sometimes as well, where you just like touch your phone.
Yeah, exactly. I think if there's one thing I would create right now, if I had the money, which I absolutely do not, Victoria, is a wallet for your bank. And it sounds a little bit crazy, but we have Apple wallets or Google wallets, their wallets, everything else. Why not have a direct wallet for your bank account that allows you to make payments?
Hello everyone, my name is Viktoria Soltesz and I'm the founder of the Soltesz Institute. Startups fail, and if they fail, most probably they are failing because they don't have the thought out and proper channels for payments and banking.
Hello everyone, my name is David Vartimashvili. Compliance is no longer a side function. It's a core operational requirement.
Welcome everybody. I'm Marcia Klingon-Smith. Instant payments is transforming the way money moves all across the globe, across all the different industries.
What do you think? How banks think about these open payments? Because obviously the bank wants to avoid risk under any circumstances. So until now, when the bank received the settlement, I know it's coming from a regulated, financially licensed company. They did their due diligence. They know what they are doing. They are collecting all the funds, put it in a bulk, and settle it in one go. So I can see that the sender is a trustworthy, regulated financial institution when we are talking about card payment settlement. But when we are talking about open banking, I can see as a bank that everyone is paying directly to my bank account. There could be a person using the bank account even from, gray listed countries, right? Maybe there's a tourist coming from a country which is happen to be on a gray list, or there could be other individual payments. And it's always harder to filter out if the individual payments is legit other than the company payments, because at least someone is checking the companies, at least they're audit or whatnot. So what do you think? How banks think about all of a sudden the increased number of random individual payments in small amounts flooding their account?
Yeah, it's a good question. And I think from a banking perspective, there would be some nervousness around waking up one day and receiving thousands of pounds from thousands of accounts. Now, when it comes to open banking, and the open banking providers have a bit of a tough time, because they have to integrate into every single issuing bank separately.
Yeah.
So they do have the ability to say yes or no to certain issuers and certain banks, but then that also then has an impact on the customer journey. Because imagine as a consumer, you get offered the ability to pay by open banking. You go into open banking and it doesn't show your bank account. It's a terrible customer journey, right? And then it has a knock-on impact back onto acceptance rate and conversion rate from a merchant perspective. So they're pretty better off saying, actually, this isn't worth the 40 basis points in savings to really annoy my customer. Let me just offer them card payments and not open banking.
Yes, this is exactly what I'm thinking, because there could be card issuers doing business with countries globally, right? That's the power of the card scheme, that I can use my Visa, MasterCard, Amex all over the world. So there is some kind of trust already developed with these card schemes. But when it comes to direct connection with some random bank from some random country, that could be a major complexity when it comes to acceptance, because how comes now accepting direct payments without screening anything from all over the banks in the world? Of course, there is a huge risk. And when there is a risk, there's someone has to pay for it. So that might increase in fees. So what do you think? At one point, maybe open banking could cost more for those merchants just because of the increased risk, right?
Yeah, there's definitely an opportunity out there for someone to come in and offer that insurance for open banking products. I just don't know who in their right mind would be happy to take the risk on open banking products, right? And right now, especially we have in the UK, you have the ability to raise chargebacks against certain consumer credit apps, and you do also rest of the world when it comes to chargebacks. There's nothing out there for open banking. And the minute you start to implement this, the cost of transactions just go up significantly, and then it ends up drawing people away. So I wish I knew the answer. I do think it is having an impact if businesses are implementing it correctly. An example of that, and I've seen it previously, is actually all these open banking transactions are not setting directly to the merchant, but they're going to an escrow account, similar to what you do with Visa and MasterCard. And then once a day, you then settle the merchant all their open banking transactions from that previous day with reports showing that all the transactions are made up. Most open banking providers now are offering that, which I think is great because you're taking some of the stress and risk from a reporting perspective and giving the merchant that money still the same day, but not necessarily the same second.
Right. So then what's the point of the, innovating everything where we're going back to the same method, right?
Exactly.
Visa, MasterCard, or someone else is going to pre-check the transactions and settle in bulk, right?
Absolutely. Absolutely.
So it's just funny. Great. Let's talk about how merchants can master the payment. So what do you think? What should businesses look for when they are choosing the payment partner? And just think outside of the box, think outside of the obvious. Of course, you do the due diligence. Of course, you need to know that that payment partner is licensed and it's regulated and it's working according to the rules, so your money is safe. But is there anything else that you can do as a merchant to immediately see the red flags and immediately see if someone is worthy to look at from the get-go?
Yeah, I think research is always key. There's so much adverse media out there now when it comes to certain payment providers. So I'd always recommend as a business that before you go to market, that you're really understanding who the experts are in the sector that you're selling into, whether that is retail, whether it's digital goods, whether it's crypto, whether it's travel, whether it's gaming, really understanding in your world, who are the providers that provide them services today, and then just doing a bit of due diligence. And it could be a quick Google, right? It could be using an AI bot. It could also looking at some of your competitors and who they're using today, right? And there's so much information out there now about telling you what payment providers businesses use. That would be my recommendation, right? Who are the best out there? Who are they using? That way, you've got an understanding, well, if they can do it, that there's a reason why they're working with that provider. And actually, you don't always have to choose one provider. You can mitigate risk by using more than one provider. And you see it now that where a lot of businesses are giving themselves some redundancy and splitting their processing through different acquirers for different reasons. And it may be because that maybe one of their providers doesn't have a great acceptance rate, but it's cheap pricing, right? So you've got them there as priority number 2 just in case. But we see a lot of, and we look at the orchestration market right now, it's doing exactly what it needs to do, depending on what the country that you're processing, the currency that you're processing. Sometimes different providers are better for certain regions than others.
And I think it's to don't keep your eggs in one basket, right? So that could be also the reason. But it then goes to the product situation that I am getting volume discount from my payment partner, right? Because obviously they already did the due diligence on me, they know me, they trust me. More volume is just an extra click for more profit. Why would they lose it, right? So they are encouraging me to send all my volume through one channel. But at the other hand, common sense dictates that I shouldn't have a single point of failure. I need to diversify all my payment providers, even though it could be the same, right? So if they are targeting the same countries, processing in the same currencies, what do you think, how we can find that very delicate balance when we can take advantage of the volume discount, but again, we are not really relying only on a third-party provider?
I think my recommendation to any business is that you should always have more than one payment provider, whether that's 99% processing through one provider, 1% through another, but also be open and honest with your payment providers. And this is something I always ask for businesses that I speak to. Tell me why you're working with different providers and the reason working for them. It's my job as a consultant, the business that I work for, and for you, to ensure that I'm helping you get the best possible revenue from your payment process. And that is our job. And sometimes people are blinded by commercials straight off the bat by looking at proposal on the contract. But actually, it's so much more than that. How are you going into different regions? And how can we use our experience to help you go into certain markets, our background on that? So I'd always recommend, like I say, working with more than one provider and knowing why you're working with that provider is absolutely key. You see this a lot in the industry that someone moves to a different business and they try and take their customers with them. As a salesperson, do not try and sell to a business if your business is not the best for them. And it's really hard to try and say no to that, right? It is really hard to not say no to that. But actually, the power of saying no is instrumental when you're trying to build relationships with businesses.
Yeah, there's an inherited a conflict of interest when it comes from that, obviously you want to maximize your profit for your shareholders, but also you want the best for the client as well. And I think it comes down to really the whole strategy, what the company wants to go for, where they need to really investigate where the money comes from, how much, how often, what currency, who is doing the exchange, what are, as we mentioned, the approval rates, what are the different payment methods in the mix, how to optimize that. And also it needs to be overly looked at on a regular basis because you need to revise everything 3 months, 6 months time, the latest, because everything is changing all the time. Your company is changing, your volume is changing, the regulatory environment is changing, you're entering new markets. Meanwhile, your bank acquirer and payment partner is also changing, coming up with new products and services. So it's a never-ending kind of hustle that you need to do around your payments and then plan the operation around it to support this healthy flow as well, right?
Definitely. It's a service that you always need to make sure you're getting the best of. So I always say this to businesses, look at your payment providers, right? Look at them monthly, quarterly. Make sure that you're not getting price increases. Make sure that what they set out and sold to you at the beginning is what you're still receiving, but also push them. What innovations that payment provider working on? We spoke at the start of this call about innovations happening every single day. As a customer of a payment provider, I need to be seeing that innovation and understand how it's impacting me as a business. So I'd always drive that. But next time you're sitting down with a business, your payment provider, ask them what they're doing as a business. Don't just tell me, because I think our role in the payments ecosystem is to teach our merchants about the payment world, but also internally we're teaching the schemes and the payments world about our merchants. And we really do work as that interim and that middleman of trying to work out how can we get the best for our money when it comes internally, but also helping our customers. Now, there's
taking the mediator role, right? In the middle.
Absolutely, yeah. And look, we want to be the subject matter experts. We want to try and learn as much as possible. One thing I'm not a retailer and I'm not a scheme, right? But retailers never speak to the schemes, they speak to us. And so we need to, as payment specialists, is really understand what our customers do from a merchant perspective, how they want to succeed, and then speak to the schemes and everyone else in our ecosystem as to what we're doing to enable. And that's our job, is to enable.
That's right. And I think one aspect that we haven't mentioned is really the scalability, because I have seen so many times when a startup comes, they have big hopes of it, obviously, but they just lacking of funding. So they want to find something which works now. And then they build a whole operation around that, setting up processes, embed that financial provider to the core system. And then when they go viral and all of those payments are coming globally, the payment system is unable to keep up with that. And it's just either crashing or there are issues, technological problems. What do you think? How we can find that balance for those startups that you are not overspending at the beginning because you're still testing the waters, you still need to see what is allowed, what can you do, and what not, but still thinking about the future of scalability, that once I go viral, then my payment system will be able to handle 10,000, 100,000 of payments in a day?
And that is a dream. I think payments is such a fragmented industry, no matter what anybody says. There is not one provider that can give you everything. It's just not out there. So one thing I would always do is speak to more than one provider, whether your provider you're paying or not. Most payment businesses, because they're trying to sell products to you, should be telling you what's going on in the world. Also, get into events. Go to events. If I was a business that was accepting card payments, I'd be wanting to go to card payment events to see what the world is talking about. Because although we want to trust the people that we're working with, they're also trying to sell you a product and a service. So go out there and do your analysis. If I was to go on holiday, I don't just look on one website and book a holiday. I speak to my friends and family. I check social media. I check the apps. I check Google. So I think it's similar in the B2B world, right? It's become more like a B2C customer experience. It's making sure you're doing your due diligence. And yes, as a payment consultant, you want to give the business the best opportunity right there and then. But that changes over 6 months or 12 months. Their needs change and what we can offer changes. So I'd always say, make sure you're speaking to the industry and getting to events is absolutely key. Speaking to people like yourself, Victoria, right? To plug for you there. But making sure you get people that actually are trying to help you.
That's right. And I love that you say that when you're on a holiday, you're still asking the peers and see what's the latest. I think that's what you said at the beginning. Once you're in payment, it just grabs your heart and it doesn't allow you to go anywhere else, because it's so interesting that on a daily basis, so many things can change and so many new innovations come. There are new opportunities everywhere, and then you can help your clients further. Even if you're a business owner, then how can you take advantage of that? Because a lot of times we have clients who say that, oh, I run my business for the last 10 years. I opened a payment provider at day one. I'm still with them, same fees, same terms and conditions. And we are like, why? Why are you doing this to yourself? And now we are talking about it. It makes sense to question everything. Go back to your providers, negotiate better terms and fees and whatnot. But so many people actually don't even think about that this is an opportunity. What do you think? What should be the strategy around this?
I think some people work on if it's not broken, don't fix it. And that kind of strategy when it comes to payments. And that's because they're seen as payments as an outsourced invoice that they pay each month and not as a revenue generator for the business. How do you change that perception? You have to have the conversations with your providers and see the change. Now, one thing I'd say to payment providers is that if you're not having a conversation with your customers, it's only a matter of time until another provider comes and does start having a conversation. So it's on the customer to try and understand their business, but it's also on the provider to provide them a service to help them. Now, I've spoken to business literally the last 2 weeks. I've said to somebody, do not move from your current provider. Your pricing is so cheap. Really difficult to say that, but I probably wouldn't have got that customer through because the pricing is so cheap. So yes, you should always benchmark yourself. And I think there's a lot of respect to this customer saying, I think I've got a cheap rate, but what do you think, Justin? Let me know your thoughts. So the power of saying no can be quite key in the world of sales. But I think from a payments perspective, you cannot be paying the same fee for longer than 2 years. I just don't think it should happen because life changes. Everything gets a little bit more expensive, right? Inflation, we look at the economy over the last 3 or 4 years. Why should a business that's selling online pay the same rate they were paying 3 years ago? Because everything else got more expensive. The payments companies paying their staff more money. There's going to be an increase in payment in fee. Then what that means is, and you see it every single year, every single payments company sends a generic message out to all their customers saying, hi, payment's okay. Let me last 12 months. We've seen this. And for this reason, we're increasing your pricing by X amount.
Yeah, it happens all the time, right?
Every single year. And it's called a different project at a different payment company. They all call it some Project X or Project Y. So that is the opportunity for a customer to go and go, and actually, I don't want to accept this increase, or they may want to. Let me go. I've got the opportunity now in my contract to go and have this conversation. And people sometimes just store them emails away and don't do anything about it. And then 3 years later, they realize their pricing's increased. So I would always say, at least once a year, check what you're processing, check your payment rates, and have conversations.
Yes, and always the banks or the payment providers could be your best friend or your worst enemy as well. So sometimes it doesn't work to rope the boat just to get a pip or two discount from another place when you need to start the relationship from the get-go, because even though that is heavily regulated and the regulators involved and the law is there and financial rules are everywhere, it is still somehow a very personal business, a very, I know you, I trust you kind of basis. You have my money. How you are trusting someone who, with your money, if you don't trust the person or don't trust the company, then it comes down to really just to maintain that good relationship with your provider, with your bank, even though it might mean that you're missing out on a price difference, but it can come back so much better when it comes to, seeing a big picture, right?
Absolutely. Absolutely.
Is there something that we should have mentioned but we didn't get into?
I think if I was to start a payments business today, I'd really try and understand what payment methods are best for the consumers that I'm trying to sell to. I think it's absolutely key, and I think there's new APMs, ALPMs, payment methods being created all the time with different providers, different orchestration platforms, gateways, acquirers, orchestration platforms in their own right, gateway agnostic, acquirer agnostic platforms. So I think for me, it's understanding what you're trying to sell and where you're trying to sell, and then speaking to a payments provider. And it should be their job to ensure, as experts, they're telling you the right thing to do for your business.
That's right. And this comes down to the strategical planning, right? Because it's always easier and cheaper to get it right from the beginning than a fight with all of those headaches and issues which are coming to bite you in the butt later when, I should have thought about it, I should have implemented this. Use a common sense, because I think we are not talking about anything extraordinary here. It should be the common sense that you are questioning your provider. You do need to trust your provider. You need to do your due diligence. You need to think ahead. But unfortunately, still a lot of people, a lot of businesses don't even have that. I just learned a couple of weeks ago that one of the biggest department store in the UK is still looking at the payment providers as just simple procurement vendors, and they are asking for the proposal in an offer format, and they're just making a decision solely on fee. When there are so many other moving parts and elements in this whole payment mix that once you get it wrong, unfortunately, it's so much harder and more expensive to fix it than just get it right from the beginning.
What I would add to that as well is actually the most successful consumer facing businesses right now are probably the ones that have got the best payment project set up. So you look at some of the big marketplaces, you look at some of the big retailers, they've got payments teams of 10, 20, 30, up to 100 people, right? And they're doing it for the right reasons. And actually, they're saving so much money when it comes to acceptance fees and getting the right balance for their customers that they can afford to bring people in to do that. So actually, it's not just about fintechs, right? It's these tech businesses that are being technical first and then thinking about the financials after, and they're being extremely successful.
Yes. And obviously that you need to see that where you're allocating all of your resources, what gives you the biggest benefit. But sometimes those benefits are hidden. It comes across like a risk or something that you even didn't count for, like the approval rates. And that's why you need to think ahead, consider every opportunity.
And we're payment geeks, right, Viktoria, right? We are payment geeks. And there's nothing more frustrating than seeing businesses invest millions into marketing to get people to their website to give them a poor payment experience. It's unforgivable, right? So if you invest in millions getting customers to your website, make sure you're also investing in making sure that customer journey is as seamless and smooth as possible.
That's correct. So before we wrap up, just tell us a bit more about the course, which is coming out very soon. What are you going to tell us about? Are you bringing real life stories here? What are you going to teach us here in the Soltesz Institute?
Yeah, I think for me, it's ensuring that before you go into business with payment advice, ensuring what you're being offered and why you're being offered aligns with where your business is trying to go. I think it's absolutely key. How we as individuals understanding the 4 to 5 party model, there's such a multi-trillion-dollar industry in payments. We need to really, really understand is that flow of funds and where your money is going on a day-to-day basis and who is involved in that. I think that's what I'm excited about learning a little bit more about and helping others along that journey.
Thank you so much. Well, I can talk to you for years and years about this subject. As you said, we are payment geeks. But for everyone who would like to follow on the conversation, stay tuned because the course is about to come out very, very shortly. And I'm sure that I'm speaking for you as well. So when I'm asking everyone to shoot us the questions and the recommendation, or just even share your story with us, because that's the only way that we can build an ethical, transparent industry and we can make it better for everyone, the merchants, the acquirers, and of course, the clients, the users as well. So thank you very much for being here with us today. Thank you for everyone who was watching us, and please shoot the questions. We are very open to hear from you. Thank you so much for being here with us today.
Thank you. Bye-bye.
Thank you. Bye-bye.
Hey, welcome everybody. I'm Marcia Klingensmith. Instant payments is transforming the way money moves all across the globe, across all the different industries. A recent study showed that 42% of instant payment transactions actually happen on the evenings and weekends. About $200 billion is currently locked up in the European financial system today. And instant payments really can help unlock this liquidity. The future of finance is instant, and those who adapt will thrive.